Welcome to Chit Chat Money. Today is Tuesday, October 6th.
6th.
Apparently,
yes.
I say the word 6th weird.
Revenge of the 6th.
All right. Anyway, we have an interview with KermitCapital today. It was fun. We
Great.
talked Alteryx, Slack, lots of Amazon. He actually gave us some interesting insights on Amazon. He used to work there.
Yeah.
So that was an interesting tidbit as well. And then before we get to our interview, we have our stories for the week. What do you have?
Yeah, I got Roblox. So there's a rumor. They probably leaked it that they're going public. And I think it's a very interesting company, even more interesting maybe than Epic Games itself in the gaming space. So really excited about that. And there's no numbers, but it's just going to be fun to talk about anyways. And I think it's a company people should know how it works because it's really popular.
Okay, and I have The Art of Selling. There was a pretty good article that came out this week, so I'll talk about that. And then, as always, we have our current state of Fintwit. And then on the back half, we have Hot Water, Fuck, Marry, Kill, and Anecdotal Evidence. Also, this is a good time to mention, we have a YouTube now, so if you feel like seeing our faces, I know we say this every time, feel free to head on over and watch. I mean, I guess some people like to watch podcasts.
Some people do,
which makes no sense to me, but I mean, if you guys like it, feel free to head on over.
Yep, and there'll be extra clips, like short stuff, if you're not going to want to watch a full episode. Maybe it's probably
or
some highlights from the episodes, yeah.
Okay, let's go.
Welcome to Chit Chat Money. On this show, hosts Ryan Henderson and Brett Schafer interview industry experts and riff on the world of investing. As a quick reminder, Chit Chat Money is a CCM Media Group podcast. Ryan and Brett are not financial advisors. Anything discussed on Chit Chat Money by Ryan or Brett or any other podcast guest is not formal advice or a recommendation. Now please enjoy this episode.
Welcome in. I'm going to kick things off with my story for the week, The Art of Selling. This week, Ian Cassell. Is it Ian Cassell?
Cassell.
Yeah. So he published an article titled Portfolio Turnover is the Price of Progress. I found this because you retweeted it. It was a really good article, and it was really interesting. The basic premise of it was that he was surprised how high his portfolio turnover really was when he calculated it, and that maybe it's not actually that bad of a thing to have high portfolio turnover.
Depending on your strategy.
Right, and I pulled a few quotes from the article that I thought were fascinating. He writes, with the rise of private equity and venture capital, everyone is trying to invest in public markets with the same permanent capital mantra. The lower the turnover, the more cerebral and thoughtful you appear to be with the initial investment decisions. Nothing looks better than being right from the very beginning. He goes on to pretty much say, at the end of the day, the only thing that really matters is performance. Do you feel like people are sort of over-glorifying the whole buy and hold strategy?
It's very popular right now. Well, I don't want to just try to zig while the whole market's zagging just for the whole sole reason that they are zagging, with everyone just like buy and hold, never sell, blah, 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 all that stuff. But it is quite popular at the moment. I think people underestimate the selling process and actually how much thought you need to put into that, because people are historically pretty bad at selling, and it's something you got to work on if you're going to have any sort of active strategy.
Yeah, it feels like it should be more of buy and hold as long as management executes.
Yeah, what is it? It's called buy and due diligence, right? Isn't that what he described? Something like that?
Yeah, I think so. He called it maintenance due diligence. But it does feel like a lot of people are just buy and forget and never look back.
Yeah, you got to buy and update. Every quarter at the minimum, there's going to be a 10Q. I mean, annuals even, that's fine too, but you got to keep that updated. And especially if it's a high growth name or a micro cap name, which is what Ian invests in, there's a lot of things you got to look at. Maybe if you're investing in Google, not much upkeep, but you're taking a lot less risk investing in that compared to something with a market cap below $300 million.
He also writes that there's 3 reasons he would sell. 1, if the story changes for the worse. 2, when he finds something better. And 3, if the company gets very overvalued. How much of not selling do you think ever comes down to ego? Like the unwillingness to be wrong. Like they're so afraid to be like, oh shoot, I was totally wrong. And typically it has to do with price, right? If the price, even if the price drops, they're like afraid to be like, all right, I was totally wrong. If the price is doing well, I mean, what's the quote? Nothing changes sentiment like price.
Yeah, I mean, it's tough to say. I think personally, when I'm deciding to sell something, I do have to try to counteract the ego of like, all right, I put in all this work. You're anchoring to some prices, things like that. There are some emotional and psychological things at play. For these three things, though, story, you have a better opportunity, or overvalued. What one's the hardest to sell for?
I think the hardest one to overcome is valuation. The hardest for people to recognize, and because it's always easy to justify valuation.
Yeah, true.
And it's always easy to say, they'll just buy and hold. And as long as I have a long enough time horizon, valuation doesn't matter. Well, it does. Like,
yeah,
price does matter. And if you can get a better return somewhere else, you should. And so that just makes it tough. I'm curious what you think is more important, the initial due diligence or the maintenance due diligence. The due diligence you're doing as you have the stock in your portfolio, or the one pre-purchase decision?
I think maintenance can give you a better advantage because it allows you it probably takes maybe at least a year to become an expert on a company, what I would probably classify as an expert, and that gives you an advantage over other investors because I think every investor does initial due diligence, but a lot don't do maintenance due diligence, at least very well, and that can give you an advantage because if you know the company well enough, you know when it's time to either double your position or sell out of everything probably before a lot of the other people, and that's important. You're not necessarily competing against everyone, but you have to know when the story changes for the better or the worse.
Yeah, it is true. And if you really, really know a business, like you know it down to the nitty gritty, the accounting and everything, you've read through the 10K, you can tell when something happens that you don't like. There's times when I've held companies where I'm like, that seems good, that seems fine. But there's also, when you really, really know a business, you're like, I don't like that. And you're able to basically recognize that and diagnose it earlier than most people.
Yep, agreed.
Okay, that's it for pretty much my story. What about you?
Okay, there was a leak probably from the company itself that Roblox is going public in early 2021. They feel like a direct listing stock, but there's no S1 yet, so we don't have any of the numbers, but I thought it would be interesting to talk about because they are the most popular social platform for, I think, it's either all children or just boys under the age of 13. So what is Roblox? I think a lot of people listening don't know what it is. It is, according to their website, they have a mission to bring the world together through play. Very broad, very vague. Classic Silicon Valley type company. They say we enable anyone to imagine, create, and have fun with friends as they explore millions of immersive 3D experiences, all built by a global community of developers. Does that make sense to you?
No. So what, is it basically like a mix of Fortnite and Minecraft?
I think it's its own thing. So they make it really easy for kids to build games, or adults, to build a game with their tools. And then on Roblox,
the kids build the games themselves.
Yeah, so they have 2 million developers that build games using Roblox's tools, and they have millions, like 100 times as many people that play the game. So it's kind of like they enable the games to be built, which are then played on Roblox, which is why they're such a large, they're huge, so it's
like a really, they've oversimplified the sort of game engine so that even the users themselves can create it. What's that saying where it's like, you don't become a platform until the people on your platform make more money than you, or something like that?
Yeah, kind of. I think Roblox is a big example of that. It's also similar to Facebook or Airbnb, where they're not actually making the product. All they do is enable people to make the product for them, which has been shown in the past to be a phenomenal business model when dealing with the internet. Like I said, though, they have 2 million developers that create through the Roblox studio. So, people create the games with their tools that people can play. Sounds like a really, really strong business model. Very creative. I don't know the exact numbers of their margins, but I like that a lot.
I did not know that's how it worked, and I'm getting bullish over here. But I'm also starting to think they're going to put the games as a service or platform in their S1 so much that the market gives them a 40 times the sales.
I know. I hope the market crashes before then so they don't have an absorbent valuation. But they have an absurd amount of people that play per month, 3 billion engagement hours each month, and you can access content on any device. So it's kind of like, I don't know, it's almost cloud or whatever. It's weird. It's not like any other type of game. But not to sound overly bullish here, but doesn't this have just an absurd runway for growth, like almost an infinite runway for growth, sort of like someone like Facebook or Google?
Yeah, I mean, once you have your users using it to develop, it is the Facebook model where I use Twitter, or there's companies that use Twitter or Facebook to grow. I mean, they are growing on the platform. So the users are growing on Roblox because they're building stuff out for new users.
And they're building out a business, yeah.
That's interesting. Yeah, can they monetize it? Can the users that are building the games?
I think there's been $250 million in paid out to the developers so far. I don't know if that's the exact number, but something around there.
That's crazy.
And another note is they have an internal game engine, so they don't use Unreal or Unity, which is a little concerning because I did think that they were like the two big ones that were kind of taking over everything. So we did talk about Unity on that deep dive, kind of a little, I don't know, compared to their valuation, but that's another.
I think we were wrong on that. Unity and Unreal do sort of have the bulk of the market, but I'm pretty sure EA has their own with Frostbite.
Yeah, true.
And I mean, I think there's a lot more sort of engines that are built in-house.
Yeah, they may have. We may have oversold that a tiny bit, but hey, that's all right. All right. So another interesting part about Roblox, probably the last thing, is that they're more social for kids, and they try to strive for family-friendly content. And kids under 13 spend more time on Roblox than they do on YouTube, and I think that's just boys, but still, that's a huge opportunity, and it's probably surprising a lot of people. Maybe concerning for YouTube, but there's a lot of time to be spent among kids. Founder is still there, which is a good note, and he says their goal is to build a platform that enables people to play and build things digitally. How interested are you in the S1 on a scale of 1 to 10?
Oh, big time. Yeah, that's a 10.
I'd say 10. 10 for sure. It's going to probably trade at a 40 times sales ratio, but...
It's like going through my head right now, all the possibilities, because there's, this would really appeal to the secondary, or, the second derivative of gaming, which is esports or streaming.
Yeah.
And so, I imagine people really want to watch that so they can sort of model it and build off of what they're seeing on that. I'm just, trying to play it all out in my head. I'm getting very bullish.
Yeah, it's probably the most excited I've been for an S1 in a long time. Very long time. Them and Airbnb and Procore, the underrated one, right? That's your dog.
Yeah, of course. But they've been stalling for a while. Okay.
Yeah, too long.
Current state of Fintwit. Do you want me to go first? I've just got basically one.
Yeah, go ahead.
So apparently the market loves the fact that Trump did not die from COVID.
Yeah. It's a tough thing to trade on.
I know. A few close calls like that, and we could be up another 10%.
I know. It's kind of like the trade deal, but it's a serious thing.
I think Twitter made the right decision with the whole, if you're hoping people die, we're taking those tweets down.
Yeah.
And
should be applied to everyone, but yeah.
Right. But the market responded because he, pump faked us. It seems weird. And then here's the other thing is there's no statistical correlation between what presidential party what party the president is and how the market does. I actually pulled some stuff up. So I wanted to clear this up because people tend to get this wrong, and for some reason people tend to think Republicans, tax cuts, corporate tax cuts, higher earnings.
Correlates or whatever. They have that in their mind, yeah.
Okay. From 1926 to 2019, a Republican has been in office for 46 years. Oh. A Democrat has been in office for 48 years. In that time, when Republicans are in office, there's an annual performance rate of S&P 500 at 9.1%. For Democrats, it is 14.9%, almost 5% outperformance.
And in reality, it honestly doesn't matter.
It's just fluke data, though.
Yeah.
Because the greatest performer of all time was some Republican from 1923 to 1929.
Right.
What was it, Coolidge or something? And I mean, it doesn't matter.
Yeah.
I don't know how to put that across.
It's the biggest fallacy for people investing into the market. I mean, sometimes it may be a good thing, no matter what. If there's a sell-off, maybe it's a good opportunity to buy because it's usually nonsense. But I don't know. I don't know why the markets haven't learned this.
At what point? Because every 4 years, people are like, I wonder how they're going to react to a new president. It's it's never mattered. Why would it matter this time?
Yeah, corporations are going to keep trying to make money. I'm sure Amazon doesn't really care. They're going to keep trying to dodge taxes no matter who's in office.
Yeah. Anyway, that baffled me, and so I wanted to get wanted to clear that up for anyone investing on
and
that premise.
that's a big thing when people talk about, like, if someone's a kind of a novice, they're trying to talk about it like, yeah, the election, who knows what the market's going to react. It's like that's a big sign to me if that someone's not legit if they talk about that.
All right, what's yours? What do you have?
Okay, so there was Jesse Livermore, who is a pseudonym, very smart guy though. He writes for O'Shaughnessy Asset Management. He doesn't work there, but I think they just allow him to publish things, and he publishes stuff that's way over my head. But he had this nice note that in 1991, the Japanese bubble had their real estate land value worth $20 trillion. So that was more than 20% of the entire world's wealth. And Japanese land under the Emperor's Palace, about 3/4 of a square mile, was estimated to be worth the same as the entire land in California. What a bubble.
I guess that makes me think, like, whenever I'm thinking about a market, like, oh, this is a bubble, how apparent a bubble really should be.
It's more speculation. Like, a bubble is when things get so out of hand that people, like, it's like their lives depend on it, that that the thing keeps going on. But what was even more interesting was that Ben Carlson from Animal Spirits and Ritholtz tweeted about how, the Now Show Japan stuff doesn't really make sense because that was the biggest bubble of all time. Wall Street Cynic, who is actually Jim Chanos. I know there are all these people that are private on Twitter, but just because they're, hedge fund managers and stuff, they got to stay anonymous. He said that $20 trillion figure was a little over 5 times Japan's 1991 GDP level. Right now, residential real estate in China is valued at over 4 times their 2020 GDP, and that's before you include commercial, raw land, etc. When Jim Chanos tweets about something like that, I get a little concerned. Like, all right, maybe I should not get anywhere close to Chinese real estate.
Yeah, it makes me really want to hone in on, like, a market niche that I actually understand.
Yeah, it makes me very cautious for those Asian stocks right now.
Okay, that's
one more. Sorry, one more. This is another one complicated from Jesse Livermore, but it just shows that there's a nice thread here that stock returns basically of the last, I think 3 years have almost been from all valuation re-rating for U.S. growth stocks. So I think, what were the returns? Like 22% for U.S. growth stocks. Only 1% of that was from actual growth in income. 22% of that was valuation re-rating, which is almost as bad as Japan growth in 1990. It's a lot more complicated than that, but another concerning thing.
I mean, all you got to do is look at the, like, aggregate multiples on some of the benchmarks, like NASDAQ sales multiples, stuff like that. It's definitely concerning.
It's concerning, yeah.
And you have to have super high conviction if you're buying some of these. I know, and people tend to be like, well, growth rates are higher, so it deserves a higher multiple. And it's like, growth rates come down. They aren't, like, they don't stay at 100% forever. And we're actually, Brody, our producer, is currently working on a spreadsheet of, like, some of the top 75 companies. We came up with a list of 75. And we're going to do.
Is this for the school?
No, just generally. We want to work on it. It's nice. The first 20 years, how does revenue growth, what happens to revenue growth? And it should be basically this declining line.
Right.
No matter how good the companies are. And you just have to have ultra high conviction if you're buying them at these multiples that they're going to be able to sustain a ridiculous growth rate.
Yeah, and the multiples don't matter until they do.
And they come down fast. Okay. That's going to do it for Current State of Fintwit. We have our interview up next with KermitCapital. What specifically did you like?
The Alteryx discussion and the Slack discussion. I mean, those are two companies he knows inside and out. He's a data analyst. He's not a professional investor, but he has a lot of experience, and he has a lot of experience working as a data analyst, which gave him some nice insights on Alteryx, why someone would use it. I just thought that was great, very insightful.
The other part that I really liked, he's followed by Slack CEO Stuart Butterfield. Funny response when we asked him. We're like, does it cloud judgment to be close with executives? He gives a funny response. So feel free to listen to that. Here you go. Today we are welcomed by KermitCapital, at least for anyone on Fintwit, you probably know him as KermitCapital. He is a data analyst, if I'm not mistaken. Is that right?
Yeah, that's right.
So before we get into what you do, Kermit, welcome to the show.
Thanks for having me. And like I was saying before we started recording, big fan of Chit Chat Money. And I would definitely credit you all with getting me bullish on Square when you first talked about that last year, and it was kind of dead money. So I'm very thankful for that fundamental analysis.
We're glad about that. Yeah, long Cash App, right?
Mm-hmm. Yep.
So why don't you describe a little bit about your background, what you feel, if you have one, is your specialization in investing? Is there like an area or an industry that you think you have a knack for?
Yeah. So like you said, I'm a data analyst at a private SaaS company in the commercial real estate space. My background is I have a degree in industrial and systems engineering. And I kind of stumbled into active investing just because of stock-based compensation at the two companies that I worked at prior to the one I'm at now, which was Amazon and Grubhub. So like a humongous portion of my compensation was in stock, and I was kind of living and dying over the stock price because I wasn't really diversified or knew anything about investing, and just kind of keeping tabs on the stocks because I wasn't really like paying attention to anything else. But to get to your point on like what sort of my circle of competence is generally, I would say like e-commerce and logistics, consumer facing, like tech enabled companies, and I'd say SaaS, and most of my conviction in those industries is just from like firsthand knowledge of like either working at those kinds of companies or using those types of products or services. And I try to the best of my ability, buy what I own or buy what I use, with some exceptions.
Right. And it looks like you have about 20 holdings in your portfolio. I may be wrong. That's what you posted on Twitter, I think.
Mm-hmm.
Does that fluctuate at all? And do you have any of your money in passive investments? Anything else besides those ones that you do, I guess, through Twitter?
Yeah. So it's been condensed over the last year or so, and I think it's going to condense further. I think it's important, like as investors, to acknowledge that our portfolios, or at least mine, is a work in progress, and it will be for like the foreseeable future. Like our strategies change, our philosophies change. I would totally freely admit early on I was more of a gambler or like, a trader, without realizing it. Exactly. So I'm trying to pivot more towards like I was saying earlier, like buying things that I understand, like I understand the value prop, that kind of thing. Right. So yeah. And then regarding passive investments, I put in the max annual allotment to my 401k every year. Okay. And I have a lot allocated in that, and that's pretty standard Vanguard stuff. So VTSAX, VTIAX, Vanguard Total Stock Market and International. And I have luckily enough in that I have like a personal, I don't know what you call it, consultant or whatever through Vanguard. You have to have like meet some minimum, and that's been interesting to talk to them because it's like talking to people who are like all passive. Like if you talk to them, they're like, sell every stock you have, put it all in like index funds and ETFs and stuff. And I'm just like, no, I'm not going to do that.
It's not nearly as fun either.
Yeah.
Yeah, that makes sense. Is that, yeah. And then you just have about 20 for your personal holdings. Does that, you said you wanted to come down probably, or do you have a range you want to get to, like 8 to 15, something like that?
Yeah. I talked to like friends of mine who've like done a little bit more reading on this, and apparently I guess like the optimum, like the risk reward ratio is somewhere around 15 to 17. Like if you have less than that, that's sort of like you're putting your eggs away too much, like in one basket or whatever. But yeah, I think right now my feeling is I'm in a few biotech names that I thought that I understood, but then talking to some people who really know it, I'm just like, you know what? This feels more like a gamble than an actual investment. So I might, but then of course, watch it like as soon as I sell it, it's up like 30x, in the next 2-3 years. So that's sort of what I'm weighing right now.
Okay. And then For your core holdings, the stuff that makes up the majority of your portfolio, when does, valuation come into the equation? Are you a big trimming guy, or is it kind of the Motley Fool style of, what do they call that?
Add to your winners.
Add to your
winners
winners.
win kind of thing. Yeah.
Yeah, I'm definitely more along the lines of the Motley Fool philosophy, although I have branched out over the last few years. But to answer your question about valuation, I'm not very like interested in like analysis paralysis when it comes to like finding the right entry point or finding the right buy points in terms of like price to sales or that kind of thing. But I will look at that stuff, and I think a good resource for that is Bessemer Venture Partners Cloud Index. If you go to their homepage, they list like all the big SaaS names, and they sort of like have a table that shows like price to sales or forward, like next 12 months EV to sales, efficiency scores, which is like the rule of 40 basically calculation for each company. And so I do kind of pay attention to like a relative valuation, but like in a strict like isolated silo, this is how this company is doing. I don't know how helpful that is nowadays, in this world that's like super overvalued.
Yeah. What would drive a decision to sell for you? Is it mostly in the business operations? Is it your thesis was wrong entirely, or is it ever a time where it's like,
it makes up too much of this portfolio? Like, is it 25% of your portfolio now? You got to trim a little bit.
Portfolio management as well, yeah. And then maybe, does valuation ever drive a sell decision for you?
It never drives a sell decision for me, at least for now. That's how I felt like. But to sort of like answer your question around selling in general, like I think we talked a little bit about like realizing that I don't fundamentally understand the business is one way that I might consider selling. Another one for me is like in general, like I try to initiate a position and then learn more about the business over time. And if I gain more conviction or my conviction sort of maintains throughout like a few quarters and stuff, I'll like add. But if my conviction sort of doesn't change, or like this isn't a business that I could see myself owning for like 10 years or more, then I might get out of that initial like first purchase in favor of consolidating. And then the busted thesis overall. But that's a skill that is easier like said than done. Like being able to filter out that noise and really understanding if your thesis is busted is a non-trivial task, I think.
Have you found that the starter positions help you at all? Like, does it help you track them? Does it help you do more research on the companies at all?
Yes, I think so. For me personally, it does. Although sometimes I get like right now, for example, Beyond Meat is a starter position for me. And the story is one that I generally like, but I'm kind of in that middle phase where I'm not sure if this is one that I want to keep adding to, especially relative to the other things that I own. Would I want to put new money towards this? I'm not sure. And if I'm not willing to do that, should I really be in this position in the first place?
No, that makes sense.
I think we've all been in that situation where it's like, all right, I'll create a starter position or something like that. And then you're like, I don't know nearly enough about this business. So it's just ends up being a discard, which I guess at that point it's better that it's not a large makeup of your portfolio.
Yep.
And then Amazon, I think you already touched on this. It's still your largest holding. Are there any concerns for you? I know it probably ended up being a great great thing to be paid in stock-based compensation there. Were we talking about that before the show?
No, that was during. Yeah.
Okay, but are there any concerns with that making up so much of your portfolio now?
On a business fundamentals perspective, from that perspective, not really. If you look at the overall business, this thing. I know this is like not an opinion you should like share or whatever. Like you shouldn't fall in love with your stocks or your companies. You don't know, the future's unknowable, but this feels pretty bulletproof, especially in this environment. When you consider AWS and how it's printing money, and the advertising business became the third biggest advertising business in the world, out of, relatively out of nowhere, a couple of years ago. And then the retail business, which I know the best because I worked in operations there, and knowing like when I left there 4 or 5 years ago, and having the perspective of interviewing at other logistics companies like UPS or like Peapod, which does like grocery delivery. Back then, I was like, Amazon is light years ahead of everyone.
Really?
Yeah, I was like, this is not a fair fight here.
Okay.
So, and my conviction in that has only increased. And I could give you like one example for Amazon, if y'all want, or if you want to move on.
Yeah,
Go ahead.
So I left right before Kiva, which is now known as Amazon Robotics, was just starting to getting integrated in the fulfillment centers. So Amazon fulfillment centers are like a big giant warehouse where they bring in inventory, put it on the shelf, which is now makes it available to buy on the website, and then everything outbound, which is like post buy button out the door to UPS or a sortation center and everything like that. And these buildings are huge. So the building I worked at was 1.25 million square feet. It was 3 stories. It was like an enormous building.
Dang.
You could not see from the parking lot the other end of the building if you were on one end of the building. It's like enormous. And the biggest labor cost associated with that was the stowing and picking departments. So these are the departments where people are putting items on the shelf and taking them off, putting them in a tote and getting them fulfilled. So we're talking about at any given time, like 400 to 1,000 people doing these jobs. And these jobs back then, you were walking like 10 miles a day, every day. And they were located in like suburban areas of rural towns, like, so how many people can sustain walking 10 miles a day for 10, 12 bucks an hour, all day and all night, all year long? They're like, eventually, like the turnover was starting to catch up on itself,
You get burned out. Yeah,
exactly. There's just there's not enough people who are willing to do that, like indefinitely. But what Kiva did was it turned a job that required 10 miles of walking a day to a job that's just standing and picking stuff off of a shelf and putting it in a tote. So it dramatically like increased the potential pool of people who could do that kind of work. And it also dramatically reduced the number of people that are needed in the first place to do that job. So when I knew that and I kind of saw like how unsafe like working at a UPS distribution facility is in comparison, in some of the other places I checked out, it was, I got a lot of conviction out of that,
Right. No, I would
there's
too.
a bunch of other reasons too.
Have you added to your Amazon position at all?
No, I haven't. And not to say I wouldn't, but I think that my money would be better served elsewhere, like new money. But I am very bullish about Amazon over the long term.
Okay, and then you also paid a lot of attention to Glassdoor ratings, which I like that. Why do you do that? And then how much does that actually weigh on your thesis when you buy a stock? Like, does it ever deter you completely if there's like bad Glassdoor ratings?
It's a turn off. It's not the only, it's one data point among many. I think my time at Grubhub, I don't know if y'all are familiar with The Innovator's Dilemma by Clayton Christensen.
Yeah.
But it's basically, it talks about companies getting disrupted. And it's one of the things that are talked about. And my time at Grubhub, I found that like the culture ultimately was what was getting us disrupted by companies like DoorDash and Uber Eats. And so I feel like I have the ability to read the tea leaves on something like Glassdoor reviews and sort of identify those telltale signs of like a company where innovation is just not, it's just really hard. There's a lot of friction to getting new products or services or like improvements pushed out the door. And so I view Glassdoor as, there's the quantitative like data, like what is the rating, what is it trending, how do they view the CEO as, it's just one data point, but it's not really that valuable if you're not like drilling deeper into the actual reviews and seeing what people are actually saying. and sort of sifting through like the people who have had sour grapes and identifying like, is this a place where like actual talented people can't get anything done? And if I get that sense, then, you know, I'm not really, it's going to turn me off. And that's how I kind of feel about Teledoc, for example. I know it's a hot one and people love it, but I don't know.
I mean, that's the whole conscious capitalism principle is, you know, you're generating not only shareholder value, but hopefully stakeholder value across the board. And those employees are the ones that in turn generate shareholder value. So there's definitely merit to having a place like Glassdoor and being able to figure out what do the employees think? Because if they aren't happy, and obviously there's going to be certain like people have bad experiences at any company, but if you're starting to see it as a recurring theme, that can be a huge issue.
Yeah.
Just one question for you. And on that point, like if you're applying for jobs and one of them, if you're getting an offer from Teledoc, you know, I don't know about you, but I'm checking the Glassdoor rating. Yeah. And if I'm getting a review from another competing company, you know, with maybe a similar offer and a much better Glassdoor rating, I'm probably more likely to take that other offer. So that's
not only existing employees, but prospective ones as well.
Yeah, it's an indicator that they might not be able to get the best talent in the future, which that's not going to help them drive any competitive advantages.
Now we do want to talk a lot about data because you are a data analyst, and so we'll dive into that a little bit. Something that we haven't paid a lot of attention to, but we think is a valuable tool. And the way we came across this was your Twitter. Oftentimes you'll tweet out like different charts, and it makes it really easy to see. And that, I guess the term for that is data visualization. I'm curious, first of all, what value do you think data visualization provides? And then what sort of edge do you think being a data analyst gives you in investing?
Yeah, I think this is a great question. And I've worked at like several companies now, like publicly traded companies and private companies as a data analyst. And my experience, I can't speak for other people, is being a data analyst is almost like being like a congressional aide or being like an assistant to someone who has to like get down and dirty in political bureaucratic like situations and help people make a case, like building a case for something that may or may not be in other people's best interests. Usually like thinking about stuff like in a meeting, you know, like a cross-functional meeting with different departments, you know, where we need to like institute a new process, like to improve customer experience or like lower costs or, you know, that kind of thing. And so being able to like visualize a problem and or potential solutions impact in the most like bite-sized way that can like capture everyone's attention and at the same time be like as undeniable as possible. Because so much of what you're doing is like defending your data or defending your thesis of what's happening in the business to people who are not receptive to you just from like zero, you know, from like the beginning. So I would say the importance of data visualization is like making things digestible, painting a picture for people who may or may not be technical or may or may not be like receptive to your argument. And then what sort of advantage do you get as a data analyst? It's around like being the subject matter expert in oftentimes really murky waters. Like data is usually messy as hell, especially when you're joining across like several databases that aren't designed to talk to each other. You know, being able to really get down in the weeds and answer people's off the cuff questions that are like usually critical about where your data is coming from is you know, being a subject matter expert in that kind of stuff and being able to answer people's questions gives you a little bit of political capital too in these larger organizations.
Have you ever had a scenario where like those cross-functional meetings that you just discussed, have you ever had one where you try to present someone just raw data and they're like, no, not receptive to it, and then you're like, here, let me paint the picture, and they're like, okay, that makes more sense,
but
like,
it's the exact same thing, right?
Yeah. I'm struggling to find like a specific example to illustrate to, but it happens all the time. Okay. And I think that's the value of something like Tableau, which is owned by Salesforce, which is what I have a lot of my experience with in data visualization.
Okay.
If you're not familiar, it's like a web-based, data visualization tool that allows you to customize like what what range of data you're talking about, or filter or sort the kind of data that you're looking for on the fly. And just something as simple as like the load time to like, let's check out the Midwest versus the Northeast, the same question, that kind of stuff. It could kill a meeting, if it's taking like 2 or 3 minutes for the thing to load, you know what I mean? We'll just move on into something else, and you've already like lost your point.
That makes sense. All right. Well, one company that we think is similar to Tableau, but we really have no idea. We're kind of just reading stuff online.
This
Is
is why we have you.
Alteryx. This is why we wanted to talk to you about this.
Yep.
It is Alteryx. What value do they provide to their customers, and why would a business or someone like you choose to use them?
Yeah, so I'll just add a disclaimer here. I am long Alteryx, and I've also never used Alteryx myself, like as a data analyst. However, as an investor, reading through their slides and their value proposition and their statistics that they post, their value proposition is what like heavily resonates with me in my work experience, and like what a potential solution to like the day-to-day struggles of being a data analyst would be. Right. So, buyer beware, like do your own due diligence, like maybe if you need to use it to see it, like, to like get the value prop, go for it. But I have like like something from their slide deck right here. So it says Alteryx enables analysts and data scientists to discover, share, and prep data. Prep is really important. Perform analysis, statistical, predictive, prescriptive, and spatial, and deploy and manage analytic models. So here's some of their stats. Today's analyst tools and processes are insufficient. 62% have to depend on others within their organization to perform at least some steps in the analytic process. When I talked about that value prop, like one of the benefits of being a data analyst, being able to answer other people's questions. They might not be subject matter experts. That's exactly what they're talking about. 69% are not satisfied with the quality of the final input. People questioning your data analysis, what you're providing in meetings. 81% are not satisfied with the overall speed of the analytic process. And that's mostly talking about like cleaning up data, dirty data, to make it analyzable. And then they say $60 billion per year are wasted on analysts doing repetitive manual work in spreadsheets. Absolutely. 6 billion hours per year spent working in spreadsheets, 26 hours per week wasted working in spreadsheets, 8 hours per week wasted repeating the same data tasks.
That's a lot. Absolutely. That's a lot of time.
Yeah.
And you can attest to that?
Absolutely. That is like so much of my time was like, like doing a ton of work on a like data model, and then someone like a higher up like questioning it, and then my boss telling me to spend a week or two like making sure that I've solved whatever question they have, even if it doesn't even make any sense.
So where does Alteryx sit in sort of the value chain? Let's say I'm a firm with a bunch of raw data, a bunch of different Excel spreadsheets, and I'm not able to get my point across. Do I come to Alteryx and say, hey, here's a bunch of data. Can you basically organize it for me? Or is there like a subscription, one size fits all kind of thing where I can subscribe and use Alteryx's tools? How does that work?
So Alteryx has a land and expand model that provides like various sort of clients that you can download on your desktop, and they're working on a SaaS tool. But basically, what they do, and this is covered in their analytic market landscape slide deck from their investors slide deck, is they help data analysts or data knowledge workers catalog, prepare, describe, and diagnose, and then provide predictive and prescriptive prescriptions to your data. So it's supposed to capture like that whole life cycle of beginning to end sort of data analysis, all the way from the very beginning of just like cataloging it all the way to doing predictions and prescriptive stuff. Whereas their competitors are usually siloed to particular subsets of those of that landscape.
Okay, does that give them any sort of moat? Because the worry we have when investing in one of these companies is we don't understand it enough. There's a ton of them out there, and we don't know whether they're going to eat each other's market share and compress margins.
And to touch on that, there's times when it might be an adjacent competitor. Like I don't know if Tableau and Alteryx are direct competitors,
Yeah.
and we just hear data visualization or data analytics, and we assume, well, they're all competing. I mean, is there Alteryx independently? Do they have a moat?
So to answer your question quickly on Alteryx versus Tableau, Alteryx and Tableau are both, they work together and they also work against each other. So often you'll see data analysts prepare in Alteryx and then plug it into Tableau for the visualization part, but you can do visualization in Alteryx as well. So from a moat perspective, I think Tableau has less of a moat than Alteryx does in the data analytics space. Just because they don't have as many products or services around data prep. But other aspects of the moat, it's a founder-led company. Dean Stoker's is the founder and CEO of the company. And what I really like about him is he's an excellent speaker, and he can explain he understands the landscape and the pain points of a data analyst really well. I know from firsthand experience that he's putting his finger right on the pulse of what the pain of a data analyst is. And he also understands at a high level that there's a shortage of talented data analysts and data scientists in the world. And so much of what Alteryx is doing is try to increase the pool of data analysts, data scientists, and their efficiency. So not only is the whole value prop of Alteryx to like make data analysts and data scientists more efficient, it's also trying to just increase the total number of people who consider themselves to be data analysts or data scientists. And so in that way, I view the value proposition as similar to something like Twilio and software developers, in that, yes, you can build all the Twilio tools from scratch if you really wanted to, but why would you want to when there's an off-the-shelf solution right here to help you get from 0 to 60, and you could focus on what's really important at your company.
Right.
Okay, that makes sense.
The reason we ask a lot of that we really wanted to talk Alteryx is because a lot of people discarded them after the last quarter, and I saw some tweet and it was like nothing changes sentiment like price. And it's funny because so many people, ARK Invest included, sold their entire Alteryx stake all because of one quarter in this sales slowdown. Do you think the thesis is still intact despite the last quarter?
Yeah, definitely. I think that when you talk about ARK Invest and other folks who are selling out of Alteryx, I think they're probably thinking over the next 2, 3, 4 quarters, Alteryx might have continued headwinds based on the macro landscape of COVID. So if you've been following their, earnings announcements and stuff, like they had exposure, like a non-trivial amount of exposure to travel and hospitality, the industries that have been hurt hard by COVID. But at the same time, they've also landed new customers. If you like listen to the kind of companies that they're landing, it's a lot of like government institutions, places that are not, customers that aren't like going anywhere, during or after COVID. So the way I view it is like right now they're trading some customers that are, getting hurt right now for better long-term bets. But over the long term, like this problem is not going anywhere of like cleaning up messed up data. That nobody wants to do this type of work. And once like people start using like an effective product like this, they like demand, that their companies have it, in order to like be more efficient. So I think they'll have some continued headwinds, but I think the thesis is still intact.
To touch on that, you said, they're not going anywhere. Companies don't want to do this. How hard is it for a startup to just be like, basically replicate what Alteryx is doing here and say like, does it take lots of different trial and errors with businesses, like different use cases for them to figure out all the different, to build out to where Alteryx is now?
Do you have to have like 100 developers, or is it someone that a 5 developer team can do?
Yeah, I can't really speak to like how difficult the product is to build, but what I can speak to is how difficult it is to build a community that'll advocate for your product the way that Alteryx has. I think that companies are resistant to adopt these types of technologies, especially when they're expensive. I'd say like the biggest weakness, the risk I see ahead for Alteryx is just how expensive the seats are for Alteryx. But like I do view like their work with Adapt. I don't know if y'all are familiar with that, but this is Adapt is advancing data and analytics potential together. It's their program that they initiated. I think it was like around when COVID started, and so the whole purpose is they know that there's all these people who are losing their jobs because of the coronavirus, and so they've partnered with, I think it's Udacity, to offer a certification program for free for people who've lost their job to get certified in Alteryx to get get a job in data analytics. So I think that type of work ultimately is the work that's hardest to replicate and the strongest moat for them over the long term.
Oh, that makes sense. All right, last question on anything data. This is not concerning Alteryx, but do you have any underfollowed data-focused companies that any listeners should maybe, get on the radar or possibly research more?
Yeah. So on my watch list is a company called Domo. I don't know a ton about this company, and I haven't used them like myself, but it's valued currently, last time I checked, at $1 billion valuation. They IPO'd back in 2018 and are up 43% since IPO. So they're not, tearing the roof off the place, but they are growing. They specialize in business intelligence and data visualization. So somewhat of a competitor with Alteryx. They're trading at 5 times EV to forward revenue, 23% revenue growth year over year, 73% gross margins, pretty good, and negative 30% last 12-month free cash flow. So I think it's worth looking at.
Yeah, that does sound. It's better than everything that's trading at 25 times sales right now.
Exactly.
So that's something to definitely watch out for.
Yeah, keep on the watch list there. Now another company that you've talked a lot about is Slack. Slack is it's almost polarized on Twitter. Like a lot of everyone's kind of has like a hot take on the business
among the investor community. Yeah.
Right. So what is the value of Slack to a business in your opinion? And do you see it actually being able to become an ecosystem of apps as opposed to just simply messaging / workflow tool?
Yeah. So off the top, like, going back to like investing theses or like principles, like, when I talked about investing in what I own or what I use, like there's no product or service that I use more like frequently besides Twitter, which I don't invest in, than Slack. Like I use Slack in my, like literally all day long at work. And then I use it after work in this coding boot camp that I am in. And then I also use it in like an investing group that I'm in. And I also used it in like other contexts before, and I've used it at like the last 2 companies that I've worked at as well. So, it would be weird for me to not own it. Like after doing my due diligence and also knowing that the revenue is growing 50% and yada, yada. But to answer your question about the value of Slack to a business. So Slack is one of the few software tools that is used by everyone at a company. So you can also think about Zoom. You can also think about like Gmail or like Outlook or whatever. It's one of those few things that everybody across all departments use. So it has it's a horizontal layer that cuts through all departments within a company. And it enables collaboration between departments with integrations that are used heavily in siloed departments. So if you think about Atlassian's software tools like Jira, it's going to be used mostly by product and dev folks. But there's some information that's valuable to people in other departments. Like, hey, has this product released? Can we start marketing it? Hey, has this bug been fixed so support can know and get back to a client? So those people can get updates on Atlassian without having Atlassian licenses, because there's integrations in Slack that'll tell you this is ready to go. This thing that we need to know about. Same thing with HubSpot or Zendesk. It gives like a view into other SaaS companies.
Even like Datadog too, right?
Yeah, I don't know. I haven't done as much due diligence on Datadog,
Okay.
but they have a ton of integrations. So
Sure.
as far as your question about like ecosystem of apps, they already have 23,000 apps in the app directory, 700,000 custom apps and integrations that are used weekly, and 820,000 active developers. And for context, Microsoft Teams, based on my research, just going on like their app store, only has 666 apps. So like, will they catch up? Sure. But I think that there's something to be said about a $15 billion company having this much much of a robust app ecosystem compared to Microsoft.
Well, yeah, and then we're going to ask about Teams. Does that give them a competitive advantage? And do you see any other competitive advantages they have over Teams?
Yeah, so like a common theme you'll hear in investing in SaaS companies is sort of being vendor neutral, or being agnostic. And Slack has this over Teams. So where Teams, has Azure and the Azure ecosystem, and like products that'll compete with your Datadogs and what name your SaaS company. Slack is neutral to that positioning. So they don't care really what you're integrating with on Slack. They even have a partnership directly with Microsoft Teams. So they are like allowing anyone to integrate to them, where Microsoft might not be able to say that as well. So some other thoughts about Teams is, in my opinion, and I think it's more than just my opinion, the whole concept behind Teams was a defensive product. So like Ben Thompson from Stratechery, if you guys know who he is, he's like a blogger. Yeah. So he said, for Microsoft, getting customers to switch was never the goal. Like Instagram adding stories to remove the impetus for new users to even try Snapchat, Teams is a way to prevent Microsoft customers from even trying Slack, from ever trying Slack. And then Stuart Butterfield, he tweeted in July, Teams has architectural limitations that prevent it from scaling to even 1% of the size of our largest instances. So our enterprise customers couldn't even switch if they wanted to. I'm a little bit skeptical of that. Just because if you think of Azure and how many customers they have on that and how fast they're growing, surely they can scale. But I think it's an interesting thing to think about.
Now, do you think the space at all that they've kind of built out themselves? I think they're building their own market. It's really one of those 0 to 1 things, classic Peter Thiel type innovation there. But is it zero sum at all, or can they both win? And can someone else come in that like Google or Amazon, and all of them succeed as well?
Yeah, the way I think about the market is like, I think that they can be winners in this space. I don't think it's zero sum, and I think that there's some like companies, there's some organizations that it makes sense to be on Microsoft Teams for, like something like a government agency or a defense contractor. Maybe you don't have the needs of like, being integrated to Jira and ServiceNow and all these other like, SaaS or platform as a service, infrastructure as a service companies when you're doing more like more of that type of work. And you might have like security needs that are just like not able to be like met by Slack for whatever reason. But in my opinion, like Slack's value are with companies that deploy software applications and need to have like a constant, like agile sort of work environment where they need to communicate in real time about what's going on and are constantly pushing new products and services. And so where would I rather have my money personally? Like in the $15 billion company that's like, their customers are going to potentially be other 15, 30, $100 billion companies. I'm going to grow the seat count. And
it's a bullish signal to me when you see all big tech chasing what they're doing.
Yep.
True.
Like, and we saw it with, I guess Snapchat might not have had a great ROI, but like,
Spotify.
Yeah,
Netflix.
Spotify, for example, when people start copying the business model, that kind of thing, it feels like something to pay a little more attention to. Another note that I saw here is that Stuart Butterfield, the CEO of Slack, follows you on Twitter. And we've had this debate here is if we had the largest, let's say like our largest holding was Spotify or something like that, would we, if we were presented with the opportunity to meet and get to know Daniel Ek or something like that, would we do it? Because we think on our end, maybe it clouds our judgment. Do you ever feel that? Do you think that investors can get to know management personally without it impacting their investing style?
Yeah, absolutely. I think it definitely clouds my judgment.
Okay.
Like, how would I feel? Would I feel awkward like tweeting out that I sold out of Slack? And
Yeah, maybe a little.
and then see Stuart, Stuart sees that, but I think that trade-off is worth it. I mean, like, I also have 3 other CEOs that follow me, and I invest in those companies as well. Okta, PagerDuty, and 2U. And so it's a similar thing there. But like to talk about Okta, for example, Todd McKinnon on Twitter, like he shares some like great nuggets on Twitter about his company and his leadership style. And for me, I put a premium on like strong leadership at a company. I think it's like a cheat code in investing, like maybe people feel differently, but when you know that your CEO is like a great leader, like a phenomenal leader, that builds on my conviction. So totally a risk, but I do think that Twitter is a game changer for retail investors, giving us like visibility that we never had before. So I'll take that trade-off.
100%.
Yeah, and it's also interesting to see all the corporate accounts, what they're liking, who they follow, things like
Yes.
that. That's an under the radar thing that I don't think a lot of people are looking
Mhm.
at, where you can kind of get some future insights.
Mm-hmm.
All right,
Yep.
wrap-up questions?
Yeah, these are our 2 final questions. Everyone probably knows about them. Kermit, you probably know as well. First one, what's one financial saying that you disagree with?
Yeah, and I don't know if this is like an official quote or not, but I definitely see this around and it makes sense. But don't fall in love or get emotional about your investments is one that I slightly disagree with. So, I mean, I generally agree with this in terms of like not flying off the seat of, whatever. Like when you're making a decision, like you want to do your due diligence before you invest in a company. And you don't want to like be overly emotional, but like my goal is to hold companies that I have high conviction in with high concentration for a long time, like 10 plus years, longer if it makes sense. And like, in order for me to sustain that level of conviction, like I need to be interested in the business. And I need to like be willing to like follow the story. And I need to believe more in the company than just the TAM and the moat. Like I want to genuinely root for the leadership team to succeed. I want to genuinely like root for the employees to succeed. And if I don't like have that connection, it's going to be just harder for me to sustain that conviction and that hold over time. And like I think Square is a perfect example of that. What they're doing in the payday loan space, what they're doing in the banking space. Those are all things that I can really get behind, and makes it so much easier to hold it for the long term. And I think that's important.
Yeah. And that sort of passion drives like a higher inclination to continue researching as well. I think it keeps you interested in the business.
Yeah.
Last question then, what's one piece of advice you have for any investors?
Yeah, and I touched on this before, but some friends who aren't as into investing have asked me specifically for some stock picks. I'm sure that's probably happened to y'all too.
Yeah.
But my advice to those people is like to own what you know, or own value props that you can understand, or just tangible to you. So some examples would be like, if I'd rather like suggest looking into Roku as an investment over the trade desk for someone who's newer to investing. Sure. Right? If they have Roku, they can see it, they can use it. I can like point to the value proposition. For e-commerce, these are both another 2 great companies. Etsy over Shopify. There's much more likely of a chance that they like have ordered from Etsy and see it. And Shopify is a little bit more abstract. And then Slack versus something like Fastly, which is just going to be a harder thing for them to understand conceptually and less likely for them to hold over the long term. So I would definitely, have a bias toward owning what you know or use.
Okay. That's going to do it. Kermit, thank you for your time. Had a fun conversation.
It was a pleasure.
Thanks, guys. Really appreciate it. Keep up the good work.
All right. Welcome back in. Thanks again to KermitCapital for joining us. Next, we have Hot Water. I have 3, I think.
I do too.
Okay.
So whose turn is it? I think it's my turn.
Yeah, you should go first.
Okay. Hot Water Whale Wisdom. That site where you can look at all the 13 Fs.
Love that.
Yeah, it's a good name. But there's a new site that I think has no chance of ending well. So it's called eToro, and there's a guy in there named Jay Smith, 32-year-old living in southern England, who is an investor on there. His online name is J Nemesis, okay? And 21,000 people on this site called eToro copy his trades with their own capital, $40 million. So if he buys FedEx, they do too. If he shorts the NASDAQ, they short it too. There is, I have never used eToro, but there's no way this ends well.
Who is this guy?
J Nemesis. He's the new whale.
Is he on Whale Wisdom? Has he?
Yeah, there's a good tweet from this guy named David Showell. I don't know what he is, but he's a good follow on Twitter. It was like, quote, "So how'd you lose so much money?" Answer, a very sophisticated trader online, J Nemesis. He was on a roll, said it was a sure bet. Wait, what? What do you mean? Like it's, I don't know. It doesn't make any sense. There's no way that ends well. Everyone just copying each other's trades.
Don't borrow conviction.
No, as Matt Cochran did say, and we shall not forget. All right, Martin Shkreli is back. This isn't really a hot water, but I just want to talk about it. He's blogging from prison, every week. Yeah, I just subscribed to his newsletter.
Substack? Martin Shkreli's got a Substack?
It's a free one from GoDaddy. Yeah, he's talking about how biotech stuff to his prison inmates and things like that. Sounds like it could be a fantastic sitcom. I can't wait to actually read all the stuff. It's gonna be interesting for sure. Because he's actually kind of a genius, but yeah,
that's so funny.
He also sounds like a total sociopath. All right, there's another cool thing. Hot water, I guess, would be being a bandwagon Fintwit investor, which we are. You know, sometimes everyone gets that at some point.
No,
so this guy created a blog called the I don't know the name, but it's called
like the Fintwit Index, basically.
Fintwitter Portfolio Index. Just started out. It's plus. It's beating the S&P by 3.26% during the fourth quarter. Can you guess what any of the five largest holdings?
Yeah, I can guess all of them because that's our Fuck, Marry, Kill this week is the top three.
Okay.
So, but I know the top three. It's what? Fastly, Roku, Livongo. I'm guessing C Limited. And
C's a little lower, but CrowdStrike, Square.
Damn, it's concerning that it's Square. I feel so consensus.
Well, Square's run up so much, which is so disappointing because we had to sell or whatever, but you know.
Yeah. Okay. Is that all three?
That's all three for me.
All right. I have a serious one to kick things off, which is eBay. I got tagged in some article from CNN, and I'm not going to get into like all of it, but basically there was this blog, like e-commerce bite or something, I think is what it was called. And it talked poorly about eBay, and a bunch of the employees there and the ex-CEO tried to scare her out of blogging. They sent this lady a bloody pig mask, threatening messages, live spiders, posted her address on Craigslist for hookers and swingers to come by. Sounded absolutely terrible. I recommend everyone go read it. I think they're out now. I think those employees were fired and the executives had to leave. They got some great severance package, which is bullshit. But yeah, I got tagged in that one to share it. It was bad. It was really bad.
Oh, I'm glad I'm not investing in eBay.
Yeah, and then the Playboy SPAC is official. We have to talk about this.
Yeah,
their mission statement is to, and I quote, create a culture where all people can pursue pleasure. Their two primary revenue drivers are categorized as sexual wellness and style and apparel.
I wonder how they do depreciation on the Playboy Mansion.
How
they write that down?
I think there was one that, like, one of their products was, part of their revenue was categorized under, like, CBD sexual stimulus or something like that.
I could see them doing a big CBD crossover.
Apparently the board of the company that's taking Playboy public through a SPAC is all male. No shocker there.
It's not a shocker, but it's just like, yeah.
Would you ever buy this?
No. Well, never say never.
Even if there's value.
Yeah, I mean,
would you?
You find value where you can get it. I mean, never say never. I mean, it's just because it's a smut magazine or whatever doesn't mean you like. Me choosing not to invest in it, it's like cigarettes. Me choosing not to invest in it doesn't change their cash flow.
Right.
So,
I mean, it's not like I've always had this gripe with Alteryx as a stock. Like, just because you buy the stock doesn't mean you're advocating for the product.
Yeah, and like, just because you choose
not to, making money.
Yeah, unless you're an activist investor, you can't do any of that ESG stuff.
Okay, this week, Fox 12 published an article with the following headline: Alaska Airlines to offer COVID-19 for passengers traveling to Hawaii from Seattle.
Nice.
That's a
us.
slip.
We got to get on that, right?
That's bad. Yeah, apparently they were trying to offer tests, but I guess they just scared
they
off
forgot.
everyone from flying Alaska. Yeah, anyway, I thought those were funny. Fuck, marry, kill, though. The theme is the top 3 holdings of the Fintwit index, which came out this week. Fastly, Roku, Livongo. Fuck, marry, kill.
Okay, well, Livongo, I'm going to say Livongo Teladoc, which they're going to be combined here shortly. So I'm going to marry them just because I know them the best. Wait, is it Roku and Fastly?
Yeah.
Yeah, I'll fuck Roku. I like them a little bit. The stocks run up so much, though, that like the business is so good, but the cat's kind of out of the bag a little bit. Fastly, I like them as well. Cats, it seems like it's out of the bag a little bit. So I'll kill them, but I think they're all quality businesses that are all 3 are trading at pretty high prices.
Yeah. Yeah, it's hard because like you don't really want to kill any of these businesses. They're all good. I guess that's why they're consensus now.
But like we said earlier, there's not much margin of safety in a lot of these growth names right now.
Do you think it matters? Like, honestly, do you think when most of Twitter is consensus about a company, it ends up mattering?
I don't think it matters. It's just good.
Representative of retail investors?
Probably not, but it's good just as a filter of ideas. See what's getting more popular and see what maybe is getting less popular. I don't think it is statistically that relevant, but it's also nice just as a filter in general.
Okay. Anecdotal evidence. You want to go first?
Sure. Short one. So we all know there's a lot of BS coming out through SPACs right now. Like you just mentioned earlier, the Playboy thing. The only reason they're going public is so they can really, grab the bag before, the SPAC mania ends. But in the long term, do you think it's better because there's going to be more public companies available? So there's going to be some diamonds in the rough.
Yeah, but you just can't touch a SPAC
Currently.
Until, post, 1 year after they SPAC.
Yeah.
Is that the term? SPACing?
SPACing? I don't know.
But because you don't know what due diligence is being done.
True.
And so you have to sort of wait out and see the SEC filings because we've basically gotten the worst case scenario of what can happen with the SPAC.
Yeah.
With Nikola, right?
And there could be a few more. Yeah, just wait out. Maybe you have to wait 3 years, but I think it'll be better in the long run.
Is there any good companies that have SPAC'd? Open Door?
Open Door. I mean, all the Chamath ones seem solid. They're all a little speculative, but Virgin Galactic I don't really like. But
do they SPAC?
Yeah, they were the first one a year ago.
Huh.
That kind of kicked everything off.
Interesting. Okay, well, anecdotal evidence for me. I got back on Instagram a while back. I think the experience is slowly eroding. And you might not have noticed if you were on Instagram the whole time, but I took a 5-month break. I just wasn't really, I felt like stopping being on there. And I came back, and it feels like the experience is much worse. It's starting to feel like how we probably felt about Facebook 6 years ago.
That's good, because I haven't gone, not to be one of those seem high and mighty because I wasn't ever on Facebook, but I'm good. Hopefully people are off Instagram in 3 years, and I wouldn't have missed anything. It
feels like they just pushed the monetization lever to full blast,
really,
and they're starting to ruin it. I don't know. It was just sort of I don't spend as much time on there anymore, and maybe it's because I spend a lot of my time on Twitter, but I just don't find it that valuable.
A lot of people say Instagram doesn't make them feel very well. Because everyone's all performative, and then everyone looks like they're a 10, and when their life is way better than it actually is.
Yeah. Okay. Well, that's gonna do it.
Ending on a very happy note, right?
Yeah. Thank you guys for listening. Thank you, KermitCapital, for coming on the show. If you want to get in touch with us, feel free to reach out to us on Twitter for any show that you want us to do or things you want to talk about. I appreciate twice now I think we're doing Lemonade for a deep dive here within the next 2 weeks or something like that.
Yep.
And then someone tagged us in an article, so it was good to get both people's responses on that. And then anything we say here on Chit Chat Money is not formal advice or recommendation. Thank you guys for listening. We'll see you next week.